What's up, wealth builders? Welcome back. Welcome back to another Wealth Builders Wealth Transfer Blueprint live stream Q&A. Appreciate y'all stopping by. Very, very exciting day for me. I continue to see my net worth go up, which is always good to see, right? When you've done this as long as I've done it, you love to see the fruits of your labor. So hopefully you guys are starting to see some fruit of your labor as well. Being diligent, investing in big boy blue chip paper assets, doing your thing. Love it, love it, love it. So just making sure, let me see here, where we at here, where we at. Okay, let's see where we're at here. Just trying to make sure that they got me signed in here on Patreon. Okay, not quite sure what's going on there. Let's see here. All right, let's see if we can sign into Patreon here. Hopefully everybody's having a fantastic Monday, off to a good start. At least I hope you are. Not sure what's going on here with my Patreon, but let me see if I can. I'm not sure what they're doing here with my Patreon here. Let's see. And then we'll get going with this Q&A. But have you guys been paying attention to what's been happening with Nvidia? Wow, amazing, right? Just big time. I'm loving what's happening. Loving it, loving it, loving it, loving it. Okay, I think I'm in now. All right, good. So yeah, again, guys, I looked at Nvidia, however you want to pronounce it. I looked at it before I got on, jumped into the Q&A live stream, and after hours, $144. Let me see. $144 and so $144.50. That's the after hours. $144.50. Now I've seen some people say, well, golly, it's probably gonna pull back. It's gonna Listen, man, the way I look at this thing, you got tailwinds, right? You got tailwinds. You got Fed. They're going to keep reducing these rates. That's number one. That's a tailwind, right? Because when rates go down, growth stocks go up. And Nvidia is a growth stock, right? You got rotation back into mega cap, hyperscalers, semiconductors, just back into tech in general. You got rotation back into tech, right? From investors. So that's a tailwind. Clearly, I think you got the election. No matter who wins, it'll be settled. Markets will be ready to run once we have that important position settled. Markets will be ready to run, in my opinion. So that's another tailwind. And you're starting to see, big mega cap companies getting into their earnings reports, right? Obviously, Nvidia will have its earnings report Q3 sometime in mid to late November. So for me, I just see us going higher. I mean, could it be a pullback? Absolutely, anything's possible. But from everything that I've read and what I'm seeing with the rotation back into tech, I'm a firm believer also that the stock market is about making money, guys. And pretty much most of the third quarter, you had institutional investors, they took the third quarter off basically. They just were out of the market. Wall Street aliens controlled the market. They're back in now, and they want to cap off a good 2024. So I see this thing continuing to run. Again, I'm not an expert here. I'm just giving you my opinion, but I see this thing going higher. Can you pull back a little bit tomorrow? Maybe, but why? Why not keep going, right? That's my mentality. And then I think you got to think about your long-term strategy. What are you really trying to get accomplished? That's the key, man. We got to really understand, what are we trying to get accomplished here? Are we in this thing short-term, or are we in this thing long-term? I'm in this thing long-term. So when people ask me, well, Richard, how do you feel about, 140, 143? Isn't that a little too high? And I got to ask them, well, what are you in this for? If you're in it short-term, I guess you could look at it as high since it's an all-time record. But if you're in this thing long-term and you think this thing goes to $3, $4, $5, $6, $7, $8,000 a share at some point in the future, it's a bargain. It's a bargain at 143, in my opinion, if you're in this thing long-term. When I say long-term, I'm talking about 3 to 5 years. If you got 3 to 5 years to wait, and artificial intelligence continues to pick up like it's picking up, I just don't see how this thing doesn't get to $800,000 a share in the next 3 to 5 years. Now, that doesn't mean it'll happen. I'm just giving you my little opinion. You got to go out and do your own homework and figure that out for yourself. But when people ask me that, Richard, is it 140? Is that too high? Should I wait till it go back down? I always ask them, well, what are you in this thing for? What are you trying to get accomplished? If you're just trying to time the market, then you go, that's your game plan. Wait till it go back down. Could it? Yes. It could go all the way back down to $90 a share. I don't control that. But what I can control is my wealth transfer blueprint. I control that. And that plan is pretty simple. Don't try to time the market. Just be in the market. I told you guys that a week ago. Some of our members had, they had sold out of their position and they was a little bit concerned and this and that and the market. I said, listen, if you believe this thing goes higher, you're still getting in at 135, 138, 145, 155. If you believe in this thing 3 to 5 years, if you're going to stay in it that long and there's no business performance issues with this company, listen, it's a bargain. Well, Richard, why don't you buy more? Because I already have 11,200 shares. My cup runneth over. I'm good. I didn't mess around. I bought all my shares. I wasn't messing around with this. Oh, it's up $3. Oh, it's down $3. I'm gonna wait $3. I didn't mess with any of that. When it was time for me to pull the trigger, guess what? I had no problem with execution. I got my shares and I'm good. So I don't need to buy anymore. But for those of you who for whatever reason, you didn't do what you wanted to do, or you still got room and you're thinking about this, look at what you believe this company will be in 5 years. That's what you got to think about, guys. If you're a long-termer, now, if you're a short-termer, you do whatever strategy you want to do as a short-termer. But if you're a long-termer, I would ask you, when you're doing your research, look at what people are saying this company could potentially look like in 3 to 5 years. If artificial intelligence continues on the trajectory it's on, think about this company in 3 to 5 years, what it will look like. I just read an article from a big boy too big to fail, one of the 4 horsemen. They have given this thing a price target of $190 a share. This is Bank of America. Guys, Bank of America, Wells Fargo, JP Morgan Chase, Citi, Goldman, none of them coming out on a limb and saying that unless they believe it. Just saying. And again, guys, this is not a commercial for Nvidia. You do whatever you want to do. It's your wealth. I'm just telling you guys what I've been saying the whole time. Y'all notice anytime it go down $90, $100, I don't panic. What do? I pick up the dip if I need to, or I just stay put because I know it's temporary, at least in my opinion. So, man, today was wonderful. I enjoyed it. It was incredible. I think we're just getting started. That's my opinion. Again, I'm not I'm not some guru here. I'm just a guy who's been doing this for 30 years, guys. And when I see a company like this with all the fundamentals in place, with the type of CEO that they have, I mean, this guy's hungry. This guy ain't sitting around trying to fly around and just be cute. No, this guy rolling up the sleeves and he in there. He trying to take this thing somewhere else. He trying to be the #1 company in the world and stay there. Today, Nvidia finished. Now, at this 144.50, I don't know what the market cap is, but when they closed today at 143.71, the market cap was 3.53 trillion. Apple, 3.60 trillion. They are on their butt. I'm telling you. So all I'm going to do is continue to focus on building out the portfolio. SPLG, FTEC, MAG 7. I'm just going to keep building the portfolio out now. I got my Nvidia, and it's starting to take the net worth to a whole nother level, guys. The net worth just jumped this last week. It just jumped. And now I'm saying to myself, okay, what else out here? Can I get more SPLG? Can I get more FTEC? Yeah, I got some reserve money. What do I want to do with that? So I'm just continuing to earn and then take this money that I earn and put it in something that's going to multiply it while I sleep. Guys, don't miss this opportunity over the next few years, man. I just believe over these next few years, as rates come down, which they have to, guys. Listen, man, in my opinion, the Federal Reserve has done what they need to do, guys, with inflation. Inflation has been flat for over 15 months. Now, that doesn't mean it can't rear its ugly head and go back up, but I'm telling you, it's been flat. What hasn't been flat is the labor market. That's the reason the Fed is starting to reduce rate. They cannot afford for the labor market to continue to weaken. Their two mandates, or top mandates, they got 4 mandates, but their 2 top mandates are price stability, controlling inflation, which they've done, and then what? Maximum employment. Those are the 2 main mandates. The other 2 mandates is, what do? They monitor and regulate banks, and they make sure and they regulate our payment systems. So those are your 4 mandates, but the top 2 are the one that they're handling right now. They've already done inflation, which is price stability. Now it's time to make sure the labor market stays where it needs to stay and grow and maximize itself. Not get red hot, but don't get too cool either. They want it to just be maximum employment. So that's why they got to keep bringing the rates down, in my opinion. It's a stimulus package. All right, let's move on. I've given you guys enough of my little 2 cents, and I know a lot of you, get to the questions. We don't want to hear that. We hear that on your regular YouTube videos. Get to the questions. So let's rock and roll. Let's rock and roll, wealth builders. I appreciate y'all. We're 1,000 strong in here, man, and I see what y'all doing in the community chat. It's amazing. Keep it up. Keep it up. People are winning. People are getting confidence every day. Keep it up. It's a wonderful thing to see like-minded people come together and grow and see their wealth. Guys, I get so many emails, so many DMs from people saying, Richard, listen, man, I'm glad I listened. I know you didn't tell me what to do, but I'm glad I listened and just got my mindset right, got my long-term investment mindset right, got in big boy blue chip, just like I said at the beginning of the year. You ain't got to do nothing fancy. All you got to do is buy big boy blue chip and be patient. And they did that, and now it's starting to pay off for them. And for me, priceless. That's why I do this, for that. That's the purpose, guys. See, that's the purpose in my PPP. That's the purpose. That's what fills me up with joy. That's what gets me up in the morning, right? That's the purpose part of it. And then you got the passion part of it, and then you got the people. Passion, purpose, people. So, yeah, man. Okay, let me get going. So there we go. Got some questions here. Y'all can tell I'm excited about Nvidia. Love to see the dip. Okay. Ted McDonald. First comment. Ted McDonald. Of course, guys, listen, wealth builders. Go to Patreon homepage. And if you want to ask a question, that's the only way we're fielding questions, is from the Patreon homepage under the post. The very first post, which is what we're doing right now, the live stream post. Go down there and put your questions in the message box underneath the post if you want to ask questions. So Ted McDonald, missed you the last couple of weeks. I'm back. Missed your 90 minutes of gold every day. I got you, Ted. I know. It was a big change for a lot of us. It was a big change for me because I had been doing it all year. But I think what I'm doing right now is more effective from my lens. And again, I'm thinking about on the weekends, maybe on a Saturday or a Sunday, maybe do a live stream on the weekends, one of those days. But I'm loving what I'm doing. Back to the shorter content, quick and easy. You know what I'm saying? From a mental standpoint, just a motivation standpoint, that's been working tremendous for me. I appreciate y'all's patience on that. But my recommendation, please, guys, click into the shorter content that I'm doing every day, twice a day. Click into the content, man. If you're trying to build your wealth, and I'm one of your gang of 5, you need to be watching the videos. And then taking what's in the videos, keeping what you need, throw back what you don't need, and build you some wealth. And I know when people watch the videos and when they don't, because the questions that they ask me, I've covered in the videos, so I know they ain't watched them. So the purpose of it is to do the videos to give you that daily dose of financial, literacy, financial education. You take what you need, throw back what you don't, and then take what you do to keep and do something with it. So Ted, I know you've been watching the shorter videos as well, and I know a lot of people miss the daily live streams. I'm not writing it off forever, but for right now, I'm doing what's best for me. And I think best for the overall YouTube channel. Because see, the wealth builders and the YouTube channel, in my opinion, are two separate things. The YouTube channel is a broader, bigger picture I got for myself. Whereas with the wealth builders, it's just about you guys. The YouTube channel is about 4.5 billion people. That's how I look at it, because that's how many people have access to the internet. See, I'm a big thinker. I don't think small. When I think about my channel, no matter what the channel is like right now, I always think grand. Big, go big, but the way I want to do it. So for me, I think the shorter content reaches more people because they're more willing to look at an 8-minute video, a 10-minute video, a 12-minute video. When something pops up there and it's 2 hours long, ain't nobody finna watch that. Not, you might watch a little bit of it, but you ain't gonna, so in the culture that we have around anything right now, people's attention span is like that. So once the live stream goes to a regular video, nobody really watches it because it's too long. So the shorter content, you get more people, you get more, you know what I'm saying? So, and the goal with the YouTube channel is to reach people, right? So hope y'all understand that. Deneen, hey Richard, are you looking at any new shorts to invest in? That's a great question, Deneen. So I've been looking, and I thought I had another one today, but it's not a publicly traded company. It's a company that Nvidia, it's a healthcare company, and Nvidia's put they done reached out and put the gold standard on them. And I'm trying to find a ticker symbol, and they private, not even a public company. Just so it's like a startup. So yeah, so I can't do anything with that, but I'm looking every day. And then y'all know when I come across anything that I think is that I'm willing to put my money in, of course, I share it. And again, not to get you to buy it. I just share with you guys what I'm doing, because these shorts that I've shared with you guys over the last 4 to 5 months, man, there's a lot of money in those shorts. I mean, you talking about ServPro? I mean, look, here I go again with this ServPro. I probably need to go invest in that company. Serve Robotics, Rocket Lab, Applied Digital, who else? Nvidia, I can't pronounce them, but that's one, and there's another one. So over the 4 or 5 months, guys, I've shared some of these companies with you guys just so that you know what I'm doing, right? Some of you have taken advantage of those shorts and have made some money. I definitely have made some money. So I'm always looking for those, but I'm looking for ones that are kind of tied to Nvidia or tied to AI some type of way, or got some type of they're a disruptor to some old industry, and they coming in as a new company and disrupting the industry. So I try to look for companies like that, and as I run across them, I'll share them with you guys. But right now, those are the 4 right now that I'm currently dealing with. That, like I said, that's Rocket Lab, Serve Robotics, Applied Digital, and ticker Nevadis. I can't pronounce it. Ticker symbol, I think it's NVTS. So those are the four that I'm working with right now, and I'm on every day, looking for opportunities to make more money off of them. So that's what I'm doing right now. And my shorts are, positions that I'm gonna stay in less than 12 months. My longs are positions I'm gonna stay in longer than 12 months, long term, right? Let's see here. We got Ted again. Richard, tell us some shorts to do some homework on. I just gave you the four that I'm currently in. So those are the only four right now that are publicly traded that I'm currently in. It seems as though I'm missing one. Maybe not, but those are the four right now that I can think of off the top of my head. Ashanti, good evening, Richard and my fellow wealth builders. I am securely on the Nvidia rocket ship and enjoying the ride. I have been listening to Rich Dad, Poor Dad on my morning commute to work. Do you know why Robert says buying a home is a liability? Because it takes money out of your pocket, but then supports real estate investment. Doesn't real estate investing take money out too? That's why I gave up my rent house. I was tired of calls for repairs. So here's the thing, Ashanti, at least from my experience of buying real estate for income for 25 years, and Robert Kiyosaki is in my gang of five. That doesn't necessarily mean I agree with everything he says, but I've been rocking with him since I was 26 years old when I first read Rich Dad, Poor Dad, which got me into real estate. Here's the concept. Here's what he's saying. So at least my perception, the way I see it. If I live in a house like I live in right here, it's a liability. Well, Richard, what do you mean? What do you mean it's a liability? Well, it's taking money out of my pocket every month. I got to pay the light bill. I got a mortgage. I got to pay taxes every year. I got to pay insurance. Something break, I got to fix it. It's just taking money out of my pocket. So anything that takes money out of your pocket and don't put no money in your pocket, guys, is a liability. Now, it may turn into an asset when you're ready to sell it. Hopefully this will turn into an asset when I sell it, right? Because I hope to sell it for more than I paid for it. So when I get ready to sell this house, then it becomes an asset if I can sell it for more than what I paid for it. But while I live in it, if I'm not generating any income from it that pays for all of this stuff, it's a liability. I believe that's what Robert Kiyosaki is talking about. It's a liability. If it don't put money in your pocket, guys, and it only takes money out of your pocket, it's a liability. See, I like to call my house a dead asset. It becomes a live asset when it generates income, when I sell it and I make money. But while I'm living in it, it's a dead asset and it's a liability. Now, if I have a rental property, if I'm doing it right, the rental income puts money in my pocket. And the rental income pays for all the expenses. That becomes an asset. It's an active, alive asset because it's creating rental income, right? The rental income should pay for the entire property, guys, if we're doing it right. Now, that doesn't mean every now and then we run into a tenant leaving and we have to maybe wait a month or two to get a tenant in. And we all go through that. But that shouldn't bother us either if we're taking the rental income and reserving properly. See, what most people do, they get their rental income and they spend it on crap, their lifestyle. And then all of a sudden you need a new roof, or you need to replumb the place, or you need to do new electrical. It's taking money out of my pocket. Yeah, because you spent all the rental income. That's what most people do. Or they don't collect enough rental income. They done bought some property, and now all of a sudden the market has turned on them and the rental income has went down. They don't bring in enough rental income to cover all the expenses. So real estate for income, in my opinion, and I believe Robert Kiyosaki will agree to this, it's about location, guys. Right? Real estate for income is about the location where people have a desire to live. You can find a location where people are willing to live there. They have a desire to live there. It's a great neighborhood. It's safe, good schools, etc. They're going to pay more than they would for a place over here that's high crime rate. People ain't trying to move in. They're trying to move out. So property value is going down. There is no recreation. The schools are terrible. Don't nobody want to live there. Now, they may be forced to live there. They don't really want to, right? So all Robert Kiyosaki is saying is you got to understand money in or money out. If it's money out only, I don't care what kind of real estate you own, then it's a liability. If it's money in and it's enough money to cover the expenses, mortgage, property taxes, property insurance, repair and maintenance, plus put money in your pocket, then it's an asset. So rental property, rental income is amazing, guys, if you do it correctly. The first thing you need to find is the location, though, in my opinion. There are a lot of people that do real estate and they do it any way they want to do it. But the way I do it, and I never was in the weeds. I never had a problem with tenants in 25 years. All the properties that I've owned and had tenants in them. Never. Why? Because I only bought properties in locations that I would live in. If I went into a neighborhood and I was like, I wouldn't live here. Why would I buy the property? I'm trying to attract tenants like me who are trying to have financial responsibility and grow their wealth and pay their rent and maybe buy the house from me at some point if they like the neighborhood. That's where I never had a problem with tenants, ever. Plus, I always did a background check. I always did employment verification. I always did a credit check every time. Not that I wouldn't, overlook some of that every now and then, but at least I got all the facts. Then I make a financial decision on it. But if I'm cutting corners and just looking at check, let me get the rent check. I don't care who you put it there. Let me get the rent check. That's when you get yourself in the weeds. And it's hard to get out them weeds. Them weeds grow fast and they strangle you financially. So keep yourself out of the weeds. When you're buying real estate, buy location first. And then make sure before you sign anything, you run a cash flow on that property to make sure that rental income is going to cover everything, plus put money in your pocket. And the money that goes in your pocket, you don't take it back out of your pocket and go spend it on Gucci or Michael Jordan tennis shoes. No, you take that money that's in your pocket out of your pocket and you store it in a bank account somewhere so that you can use it on the next property, or you can reinvest it back into the existing property. That's how you don't take money out of your pocket, guys. The money that you make on these rental properties, reserve it, keep it. It's not for you to take and go spend and go to Jamaica. It's for you to be able to invest in more properties, upgrade the existing property for capital expenditures and things like that. The real payday comes as you scale up. That's where the payday comes, as you scale up the portfolio. See, my goal with my portfolio, and I'm gonna move on, I know we got time, limited time. My goal with my portfolio, guys, when I was buying single family homes in great neighborhoods, it wasn't a rental income. I was looking for net worth because I knew every property I bought, if I could hold it long enough and gain at least $100,000 worth of equity in that property, I'd do that 10 or 15 times. Over a 10, 15, 20-year period, I'd do that 10 or 15 times. Guess what I just created out of thin air? $1 million, $1.5 million in my pocket in equity. And guess who paid for it? The tenants, through rental income. That's where you got to do it like that. But see, a lot of us, we're too busy thinking, oh, golly, I got $500 a month extra from that rental property. I'm gonna go over here and make somebody else wealthy. No. You keep that 500 and you store it away. You store it away for the next property, or you store it away to make improvements to this property. That's the way you keep yourself from taking money out of your pocket when you got a rental portfolio. So I don't know what your whole story was, Asante, why you gave up your property. I guess you said you got tired of tenants. I didn't have no problems with that. Why? Because when I bought a property, guess what I did? I got a home warranty maintenance plan that every area we live in the country have companies that you pay them $500, $600 a year, and they'll come out and do routine repairs for free under the warranty. If it's a capital improvement, and when I say capital improvement, let's say it needs a new AC, can't fix it no more. It need a new one, Richard. Then they would call me and say, hey, Richard, can't fix this one. Need the compressor replaced. That's $1,000. What do you want to do? Then I'd pay for it. But the routine stuff, you know, leaky faucet, garbage disposal, little stuff, service the AC, just little stuff like that, it would be covered under the home warranty service plan. So guess what I would do? Give the tenant every time I put one in there. Here's the people you call when you got a leaky faucet. Don't call me. Now, if they don't come and do what they're supposed to do, then call me. But this is who you call. I didn't get no crazy calls all time and night, all down the day. I didn't do it. The next thing I would do is if I didn't do this, the home warranty thing, what I would do is I would have me a plumber. I would have me an AC. Down here in Florida is different from some other parts of the country, but here it's plumbing, it's AC units. Those are the two big ones, right? Plumbing and AC units. So I would get me a plumber, an AC guy, and like a handyman guy. And I would have them on speed dial. Hey guys, I got 5, 6 properties. I'm gonna need y'all to work it for me. I'm gonna give my tenants your phone number. You go over there and figure out what's going on. If it's anything over $200, you call me first. And then I give you the green light, thumbs up, thumbs down. And I would just give my tenant. So there are ways to get yourself out of that. Guys, don't be afraid of real estate. It's a great way to build wealth. Real estate ain't right for everybody, but it is a great way to build wealth. So hopefully, Ashanti, that answered your question. I think that's what Rich Dad, Poor Dad was talking about was, hey, liability. I don't care if you want to call it an asset, but it ain't putting no money in your pocket. It's a liability if it's only taking money out of your pocket. All right, Stephen H. Good evening, Richard, and much love to the Wealth Builder family. First and foremost, thank you for all that you do, and a shout out to all who continue to share great information. With Nvidia's Blackwell chips being sold out for the next 12 months, do you think potential customers will go to AMD as an alternative without the wait? Thanks again. God bless, and everyone have a great night. Absolutely. I think, see, here's the thing. Hyperscalers, mega caps, they in line first. Hyperscalers and mega caps are going to get Blackwell first. They're going to get the first shipments. They just are, right? Why? Because they volume. These guys are spending 30, 40, 50 billion dollars a year on chips or all AI related stuff. So they in line first. You got some of these smaller companies who want advanced artificial intelligence chips. They got to go other places. Everybody ain't gonna be able to get Nvidia's chips, especially after the mega caps and the hyperscalers are done. You ain't gonna be able to get them. So yeah, AMD and any of the other guys that make chips and that are good chips that can do the work. The thing is with the hyperscalers though, and the mega caps, what they're working on, Blackwell is the best thing for them because it's the best chip in the market, right? But it's not the only chip on the market. So yes, AMD and some of these other semiconductors will do well as well. All of them do well, guys. They're just not going to be Nvidia. See, in the world I live in the world I come out of, there's only one number one. There's only one number one. And that's why when a lot of people ask me, well, why don't you buy AMD? Why don't you buy this? Why don't you buy that? I ain't knocking people that do. You can make a bunch of money in those companies. I'm just wired differently. I'm one of these guys. I just want to be the best of the best. If I'm going to put my money in it, it got to be the number one. That's why I love the Magnificent Seven when I'm picking individual stocks. That's why when I'm long-term in individual stocks, I do the Magnificent Seven only, because I only want the very best, because that hedges me against failure. That's my hedge. My hedge is, okay, yeah, I may not pick up some upside from these companies, but I hedge with these companies up here, these Mag 7. So yes, AMD, a lot of those guys will make money, and rightfully so. They're great companies. Nothing wrong with them. They're just not Nvidia. So, and Nvidia is going to satisfy who? Their largest customers first. And their largest customers are hyperscalers and mega caps and Tesla. And I believe Tesla's still a mega cap, but yeah. So the Magnificent Seven type companies will get Blackwell first. And I don't know about these other companies. Like you said, AMD and companies like that will be able to satisfy them as well. So yeah, they can. AMD is going to be is a great company, and I think they work with Nvidia in some things. Great companies, a lot of great semiconductors out there. A lot of them. Broadcom, a lot of them. I just prefer Nvidia because I think for me, what I'm looking for, they got the best upside long term. So that's where I'm at. But I think, yes, Stephen, I think you can. I think AMD is going to be great. They're going to do great. I guess their last earnings report, they did great. So yeah, they're going to be fine in my opinion. It's just not a company that I'm interested in investing in. Sweet Pea, hey Richard, I'm new to the group. I followed your experience and I'm doing great with Nvidia. Thank you for sharing. Sweet Pea, thank you for joining the group. I hope you're getting out what you put in. Hopefully you're putting in something in the community chat, asking questions, answering questions. Just guys, I'm a firm believer. We get out what we put in. So please, if we're looking to grow our wealth and we need help, we got a group of people in that community chat and in the community as a whole that can at least add some experience. None of us are experts. We're not going to try to tell you what to do, but we can at least say, hey, this is what we've done and this is the results we've seen. Here's some things that I'm doing and this is what it's doing. And if you guys want to take a look at it, jump on it. I've gotten 1 or 2 shorts just out of community chat where I just saw it, grabbed it, went and did my little research and was on it. So I don't have to come up with all this stuff myself. I get a lot of it out of the community chat. Because we got varying degrees of people in there with financial literacy and investment knowledge and experience, right? We got people in there that are really good at what they do. They really know their stuff. Then we got some people in there that are getting there. And then we got newbies. So we got a whole good mixture of people just diving in there and helping and putting other people first. Right? And them second. They're putting other people first. There are people in there that post every day. I'm talking about real stuff. They don't have to do that. They do it because they're putting people first. They understand what I understand. People, then money. People first. I help enough people get what they want. I get what I want. And that's the whole concept of this community, guys. This community is not about one person. It's about every single one of you guys in here and your contribution, whether it's big or small. That's what it's really about, right? So welcome to the team. We hope you stick around. Money Mac 5, DCA still rocking. That's right, Money Mac. DCA, baby. DCA. Jay Young, yes, we steady side, baby. All right, Jay Young, I see you rocking. I see what you're doing with SPLG, FTEC, and them ETFs. Keep rocking them, man. I'm kind of tell you, you do that. Listen, man, I just started buying individual stocks like this in tail end of 2023. For the most part, I'm an ETF guy, and I've done that for years. And all I do is just keep buying every month and leave it alone and let it grow. And over the years, guys, it has grown like a crazy man. It's grown. Not that I did anything fantastic. I just buy it every month, whether it's up, down, or sideways. If it's good companies, great ETFs. And what are great ETFs in my opinion? ETFs that track a sector, that track an index. That's it. The work is done. S&P 500 has been around for 100 years. It was zero only one time in that 100 years. Right now, it's approaching 6,000 points. I don't know. So just stay in this thing and just ride it up, right? And that's what Jay Young is doing. He has a formula that works for him. And I love his formula because it was the formula that I used for many years. Many years. So keep doing what you're doing, Jay Young. You're going to get there, man. Big party coming, big party. Miss Meeks, hello, Richard, and my fellow wealth builders. Among other things, Richard, I just want to say that last week, your motto, if you can see it in your mind, you can hold it in your hand, keep pushing your dreams. This is really wrong, true for me. Thank you, Richard. Miss Meeks, you're welcome. My whole point of doing what I do is to help people, right? That's the whole point of it. And if anybody's watched me for any period of time, y'all know my consistency, I haven't changed. I'm the same guy. Yeah, house different. Y'all know I love cars, so you know I'm gonna do what I need to do with the car thing. But I do what I do with the car thing because I put myself in a position to be able to do that. For many years, I didn't buy cars like that. I just took my money and put it in assets because I knew at some point, once my assets got big enough, I could go do this kind of stuff and not worry about it. So yeah, attitude is big, right? Attitude and effort. Those are the two things we can control. And I know several of you guys have taken on the 21-day challenge to maximize your effort and your attitude. For 21 days, make that a habit. Those are the two things we can control, right? Those are the two things we control. Always believe in yourself. That's why I say it after every video. Keep chasing your greatness. All of us have greatness inside of us, guys. It's up to us if we want to pull it out. It's there. It's up to you if you want to pull it out or not, but it's there. You just have to pull it out, right? That's why I say keep chasing your greatness. I chase mine every day. I want to be better tomorrow than I was today. That's chasing greatness. I tell myself that every night when I go to bed, tomorrow, man, you're going to be better than you were today. You're going to be better, right? That's keep chasing your greatness. And then never stop believing in yourself. If I don't believe in Richard Fain, who will believe in me? Nobody. It starts with me. It starts with me believing in me. I gotta believe in me. I gotta believe and trust myself, but I can't trust myself financially unless I do what? I build up my financial confidence. How do I build up my financial confidence? By taking in financial information, right? Learning how to dissect it, learning how to research it, and then taking that, turning on the logical thinking cap. See, a lot of people think when they get information in, because they don't 100% understand it, they don't want to act on it. Guys, 70% of the stuff that I take in, I don't understand 100%, but that 30% that I do understand, I execute, period. I just keep doing it. When I grab a hold of something I do, okay, ETF, S&P 500, top 500 companies in America, I ain't got to pick them. If one get bad, they take it out and put another one in. I don't have to do that. Over the last 90 years, 7 to 10% rate of return on average. Goodness gracious. I need to be all over this. I don't understand all 500 companies. I don't even know who all of them are. I don't even know who the 500 companies in the S&P 500, and it don't care. All I care about, what has it done over a 90-year period? That's all I care about. I don't care what the 500 companies are. What I care about is what has it done over a long period of time will return and multiply my money. So that's the thing, guys. You got to get your financial education up. And again, you don't have to know everything. I keep telling y'all, you ain't got to be an expert. Grab a hold of a concept that makes sense to you and go to town. Execute. So I'm glad you're executing, Miss Meeks. Khalid, hey, Richard, for the first time, I have no question for the week. I just wanted to say thanks for being Richard Fain and being on earth with us. You are truly inspiring and motivative leader. Happy to be a member in the Wealth Builder community. Khalid, thank you, man. You always come through with something genuine and nice to say. And I see you in the community chat doing your thing, and I know you're in a different time zone and you got things going on, but you still make time. This is what I'm telling y'all guys. Khalid is a busy guy, but he makes time to get himself in this financial community because he understands the power of it. This is what I want more of y'all to understand, guys. I don't care how busy you are. You have to make time for your wealth building. You have to make time for your edification up here through these people in this community. I don't care how busy you are. You got to make time. Right? You got to prioritize. I don't care if it's 1 o'clock in the morning and you're popping in here looking at what's been going on, throwing a couple comments in, and then you're gone. But you got to make time, guys. You got to put building wealth as one of your top priorities. I'm not saying it comes before your faith. It comes before your family. But goodness gracious, guys, if it ain't number 3, I don't know what you're doing. Khalid, I know it's in your top 3. And it should be, right? It should be. Because building wealth is important, guys. It's not only important to me, but it's important to my family. It's important to my family. Right? So it's just not about me. It's about my family as well. I'm the safety net. So please, if you're not looping yourself in, loop yourself in. Loop yourself in. Only Lord knows. Hey, Richard and my financial family, I hope you are all doing well after seeing that video with your dope dance moves. Yeah, man. Listen, I ain't the best dancer in the world, but you know what I'm saying? I got to do a little something, especially when you see the net worth moving like the net worth moving, man. I got to do something, man. I gotta let y'all know, you know, how I'm feeling, and I do it through dance, even though I'm not that good of a dancer. But thank you, Lord only knows. Appreciate you, man. Richard, can we now call you Richie Rich? I was doing the same dance you were today. I just didn't upload it yet to my Instagram. Over $140 a share for Nvidia. Wow. I didn't get a pullback to accumulate at a lower price, but it's okay. I have enough shares to make me dance. So I guess it's DCA from here on and focusing on SPLG and the Mag 7. Perfect. Perfect. Perfect, perfect, perfect. Especially Alphabet. Perfect. That Mag 7, man, don't sleep on them. Alphabet, don't sleep on them, right? Don't sleep on them. It's a hyperscaler as well, right? It's just not a search engine, guys. It's a hyperscaler. It's a cloud service provider, and they're going to the next level. You're talking about a $2 trillion company. At this price that it's at right now, listen, man, I'm with you on that one, Lord only knows. For some reason, that's just me. This has been quite the ride, and I am enjoying every bit of this investment journey you have been helping me and all of us with. Thank you, Richard, AKA Richie Rich, for your daily videos and that push we need to execute. Be consistent and patient. I can't wait for that Las Vegas, Nevada party to go down right in my backyard. Much love to you and to all my Fame Squad familia. Keep dancing and God bless. Oh, you know I'm gonna keep dancing. And like I told y'all guys, we're gonna have a big party. When this thing get to $1,000 a share, it's on. It's on. And see, here's the thing. I believe it's gonna get there. I do. I believe it's gonna get there. I don't care what nobody else say. That don't even bother me. I believe this company can get there. And that's what I'm gonna continue to believe unless they prove me different. And yes, I'm looking forward to meeting all you guys when we have that big party. I'm looking forward to it. I can't wait. Let's keep moving. Tracy. Hey, Tracy. Aloha, Coach Fame. You are a treasure and we appreciate you so much. I have a question about shorts. I had an idea that if I buy thousands of shares each of APLD and NVTS, when they fluctuate, I could make what you call FCF for free cash flow. For example, on October the 11th, I bought 1,000 shares of APLD and am now up $1,700. See, that's what I'm talking about right there. See what I'm saying? See what I'm trying to tell you guys. But if you ain't plugged in, if you ain't plugged in every day, like this lady, like Tracy, plugged in every day. Ain't no excuses. She make time to plug in. See, when you plug in every day and you get around these people in this community chat and you watch these videos that I'm putting up, guess what? You increase what? Your knowledge level. Therefore, your financial confidence increases, and then you can go out and make trades. You can go out and do things like this and make you some money. But if you don't plug in and you out here all on your own thinking, oh, one day it's just going to hit me, you know what I'm saying? I love it, Tracy. For example, on October 11th, I bought 1,000 shares of APLD, and I'm $1,700 up, almost a 31% ROI. Cha-ching, cha-ching, very nice. So I could sell it tomorrow, knowing I'll have to pay the 10% short-term capital gains of 170 later and invest the 1,700 gains into Nvidia. Then the original buy money, which is 7,700, I could go back into APLD when it dips, so I could. That's smart. Yeah, that's how shorts work. That's the reason I tell you about them. That's how it works. You just got to figure out what's right for you. But it's a short for a reason. I'm in and out. I'm in and out. And these companies, they're going to fluctuate $3, $4, $5, guys. And that's where you make your money. Don't get greedy. It's going to pull back at some point. And then you buy in again and let it go back up $4, $5, $6, pull back again. And again, guys, this is not financial advice. This is just common sense, at least in my world that I live in. Hell, it's a good little company. It's trading at $10 a share, $8 a share. When I go look at the 52-week high, see, this is how and again, guys, I'm not an expert here. This is exactly what Tracy is walking us through here. This is all I do. First thing I do is I go look at the 52-week high and the 52-week low on the stock price. That's all I need. All that other stuff, I don't need none of that. 52-week high, 52-week low. My job is to buy it as close to the 52-week low as I can and wait until it go back up to the 52-week high or close or right under it or boom, I made me $4 or $5, I get out. And I wait again till it goes back down to almost its 52-week low. Same thing Tracy is doing, right? So I'm not telling you that's the strategy for you. I'm just telling you if you're willing to take on the risk, you can certainly at some point hopefully get the reward. That's all Tracy is doing here. She's taking on risk, calculated risk. She's plugged in. She watches the videos. She's in the community chat every day, absorbing, soaking up knowledge from all of her other fellow community members. They're soaking up knowledge, getting more and more confident. And then when an opportunity presents itself, you're not sitting there like, oh, scared to death with your emotional thinking cap on. Now you got your logical thinking cap on and you act. Nothing's guaranteed in this life. Nvidia might go to zero tomorrow and I lose it all, guys, but I'm willing to take that risk based on the information that I know. That's how you build wealth, right? So you got to get plugged in. Stay plugged in. You got to get plugged in. My question, here's Tracy's question. Would you continue harvesting FCF this way to use the gains to buy more Nvidia, or would you rather take all of the monies, 8+K, and put in Nvidia today and now? I'd like to reach my goal of X amount of Nvidia shares and hold for 10 years. Halfway there. Thank you, Coach. What would I do? Would I continue to harvest the profits and then just take the profits and put into Nvidia and then keep my original and just continue to go back and hit the shorts? Here's what it comes down for me, Tracy. It comes down to, where am I going to get the biggest return on my money? Right? Where do I get the biggest return? Now, right now, you just got a 31% return on your money. Short term. That's hard to beat, especially if you can duplicate that 3 or 4 times a year on the shorts, which you probably can. I'm no advisor here, just I've done this all year long with my shorts, so you can do it 2 or 3, 4 times a year, right? And if I can get that kind of return 3 or 4 times a year compounded, I don't know how I give up that. And then what I would do, like you said, I would probably go ahead and keep my short strategy as long as I'm getting me a good little return and it's making sense. I probably keep my short strategy, but continue to DCA into my long-term strategy, right? Until I catch my shares. Or you can say, well, hey, I'm going to take all of this money right now and go into Nvidia and just get my shares where they're at a discount, knowing that 2-3 years from now, they probably won't be trading at a premium, and I'll get a bigger return than this 30% I'm getting short term. Even if you got a compounded 60% return over a year in a short, I don't know. Do you think you could get better than that over the next 2 years in Nvidia? You just have to weigh that. For me, what I do is I figure out how many shares of Nvidia I want, and I attack it until I get my shares, and then I go back to the short strategy. That's the way I did it. I just said to myself, listen, my original thing was I want 10,000 shares in Nvidia. So I took every dime, everything I had, and I ended up with 11,200. So I'm good. So now all of the money that I make, I just do my DCA, satisfy that, and then I reserve it, and then I put it in the shorts or whatever I want to put it in, because I've already got my allocation. Had I not had my allocation, I would be buying my allocation of Nvidia right now if I believe long-term Nvidia goes to the moon. I would not buy Nvidia if I don't believe it goes to the moon long-term. I would just stay with the strategy you have. But if I'm buying this thing at 140, 145, and I think in 3 years it could be 345, that's a no-brainer, right? But you got to understand what your long-term outlook is for this company. See, I'm a guy that believes it'll be $1,000 a share in 5 years. Everybody don't believe that. They don't. But I believe it. And that's all that matters to me in my wealth transfer blueprint. Is what matters to me is what I think. So I believe it's $1,000 a share. So anytime I say to myself, golly, man, you might want to sell it and then take that money and dip over here and see, I have those thoughts too. But then I quickly reel myself back in and say, Richard, what is the concept here? Are you trying to make a couple $100,000 or are you trying to make $2 million? What are you trying to do here? See, that's the difference. See, I'm not trying to make a couple $100,000, and that's a lot of money. But for me, guys, I'm way out here. So all this selling and buying back, that's too much work for me. That's too much keeping up. That's too much work. I don't want to be trying to buy and sell and time the market. I don't want to do that. Yeah, could I sell my stock right now? Sure, and make a bunch of money. Could I sell it? Yeah. And then cross my fingers that it go back down to 90 at some point? I don't want to do that. I just rather say, okay, I'm going to keep mine. I'm long term. That's why I got the shorts. See, that's why I got my shorts to make me a little FCF, so I ain't got to worry about selling my big boy stuff. That's why I got the shorts. So I can get some instant gratification, so that I don't get freaked out. Oh golly, man, this thing is woo, sheesh. This is a lot of money here. You might want to think about this. Do you want to? You could go back down. I don't have those thoughts because I got the shorts, and I just make money on those. And then the long-term stuff, I just have got my goal in mind, which is $1,000 a share. And unless the company does something that ain't right, I'm gonna stay in there. Through all the downs, the ups, the downs, I'm gonna stay right where I'm at until I get there. I love your strategy, but if it was my strategy, I would get my shares of Nvidia while I can. I would get to my number. This is just me because, see, I think the thing goes to $1,000. You may disagree with this. You may not believe that. If you don't believe that, then you stay on the strategy you're on. But if you believe this thing can be $3, $4, $5, $6, $8,000 a share at some point over the next 3 to 5 years, and you can buy it at 140, but see, you got to be built for this, and you got to believe that. Everybody don't believe that. A lot of people do not believe this company is going to come anywhere close to that. I'm not one of those people. I believe it will. So it's no problem for me. If I didn't have my allocation already, it would be no problem for me to buy at 140. Just wouldn't be. I wouldn't be sitting around waiting for nothing to go back down. I wouldn't. Right? So love your strategy. You got to figure out. But if you like Nvidia long term and you believe 3 to 5 years from now, it can be a major play for you, then I think you know the answer. Okay? Let's keep moving. Kent Gant Jr. Hey, Kent. Hey, good evening, Richard and Wealth Builders. I recently celebrated my milestone for hitting my first 100K a few weeks ago. Congratulations, Kent. The first 100 is the hardest one, man. Now, put on the turbo boosters. Put on the turbo boosters and put another zero in there. What is it, one more zero? What is it, 5? Yeah, one more zero. One more zero. Or even 2. However you want to do it, brother. You can do it. Either way you want to do it. They say the first 100 is the hardest. In my opinion, that's correct. My question is to see this multiplication take place. Do all 100K need to be in one particular stock ETF, or can I be a result of my DCA multiple positions? Thank you in advance. Well, here's the thing you got to think about, Ken. You got to figure out where you want to be. See, the question is, I'm at 100,000 today, but what is my ultimate goal? I don't know. You got to answer that, right? Whatever your ultimate goal, let's say hypothetically, your ultimate goal is $1 million. You got 100K net worth, you got 900,000 to go. Now you got to ask yourself, okay, am I going to take this 100K and this is my only money that I have to invest to get to the 1 million? Or am I going to take the 100K, put it somewhere, and then I'm going to be earning more money and taking a certain amount of money every month that I'm going to add to the 100K? Then I got to figure out, how long do I want to take before I get to the million? And again, we're hypothetically talking about the million. It could be less, it could be more. Hypothetically, you got to say to yourself, how long do I want it to take for me to get to the million? Let's say you give yourself 10 years. So in today's environment, you got 100K. You want to take that 100K and turn it into 1 million. You want to add a zero, right? I got 10 years to do it. So you got to go look at a future value calculator like calculator.net, plug in the 100K to calculator.net. And if you put no more contributions, what you got to figure out is how long will it take you at a certain rate of return to take it from 100 to 1 million. Now, you got to also find investments that have a historical track record of giving you that type of return. What I can tell you right now is 10% won't do it. I can tell you right now, you're going to need something way bigger than that, right? Right? So let's go to calculator.net. Just real quick. I know I'm running low on time, guys, but I want to help Ken out with this if I can. So you go to calculator.net, you go down to future value calculator. And let's say 10 years is your number. Now what you got to figure out is, what type of return do I need to get on a $100,000 one-time lump sum investment? What type of return do I need to get over a 10-year period to get it to $1 million? Let me tell you. Let me tell you. So I got 100K to start with, and let's just say hypothetically, that's all I want to put in. You'll probably do more, but let's just say you don't do more. What type of return do you need? Woo, goodness gracious. Woo. Let's see what type of return you need over the next 10 years. Okay, there you go. There we go. Here we go. So in order for you, let's see, let me just get this thing dialed in. Yeah, there we go. So in order for you to take 100K, right, 100K over the next 10 years and turn it into $1 million, here's the numbers right here. Let me just show you. Here's the numbers that I just did. So we just did the numbers. Let me show you the results. There's the numbers. So you take 100K, you got to get at least a 27% rate of return over the next 10 years. At least a 27. If you get a 27% rate of return on $100,000 over the next 10 years, an average 27% rate of return over the next 10 years on 100K, you got $1 million. Now, you got to ask yourself, okay, what companies, what ETFs over the last 10 years has delivered at least a 27% rate of return over a 10-year period? I can tell you a couple of them. Nvidia being one of them. It's had compounded growth over the last 5 years of about 38%. And if you go look at a 10-year deal on it, it's crazy. Here we go. And again, guys, I'm not trying to tell you this to get you to go buy anything. I'm just telling you what you got to go look for if this is what you're trying to grow your money to. So let's go Nvidia, 10-year, 20-year, 10-year rate of return. The annualized 10-year total return for Nvidia stock is 75.90%. Or look at the Mag 7. Check out the Mag 7. Oh, golly, one individual stock that's too concentrated. That's crazy. I'd never do that. Okay, don't do it. Mag 7. Mag 7. 10-year rate of return. So if you want to split it up and DCA it, not DCA it, but just split it up in 7, take 100,000, divide it by 7, throw that in the Mag 7. Here's your Mag 7 rate of return. Let's see what the Mag 7 got. Here we go. The Mag 7 stocks, let's see, it does it give us the 10-year? I'm looking for the 10-year. Oh. Where's the 10-year? The 10-year is about 34.59%. 10-year on the Mag 7. You only need 27. So I've given you Nvidia and I've given you the Mag 7. So you figure out what you want to do, or you go out and find other opportunities that'll pay you a 27% rate of return. But for people to sit up here and say, oh, it won't happen. It's happening, guys. I just gave you the Mag 7 and I just gave you individually Nvidia, and you can go find others that have done it. So all I'm saying, Kent, is if you want to take that 100K and you want to get to $1 million in the next 10 years, you need at least a 27% rate of return on average over a 10-year period. And you're there, brother. You are there. So happy hunting. I just gave you 2 options. You ain't got to choose them, but they've done it. So there you go. All right, let's keep moving. Oh, would you DCA or would you just a lump sum? I'm sorry, Ken, I'm going to be honest with you. I'm going to lump sum that thing, all 100K into something. And then what I'm going to do is I'm going to take other money that I'm making and DCA that. I'm going to take that hundo, and either I'm a Mag 7, split it up into 7s and throw it into Mag 7, where I believe over the next 10 years I can get more than a 27% rate of return, or a guy like me, I'd take it and put it into SPLG, FTEC. Now, SPLG, you're not going to get that return. But FTEC is close. You just got to decide what you want to do, right? So there are ETFs out there. There are individual stocks out there. But what I would do is I'd take the 100K and I'd fully invest it in something that has a historical track record of paying me 27% or higher. And then I would take the DCA portion where I'm adding to it. That would be coming from my income or my side hustles. So I do both. I'd lump sum, not lump, I'd lump sum it into the 100K, and then I would DCA in on top of that. What's up, Blaine Booker? What's up, Coach Richard and Wealth Builders? Happy Monday, everybody. Happy Monday to you, Blaine. GB, also thanks for the nice break from reality video today. You're welcome, GB. Appreciate you, man. All you do on the community chat, you and man, there's so many of you guys over there that's killing it. So thank you so much for being leaders and you know, sharing your investment experience and just your life experience. Y'all know who you are. Y'all over there killing it. Thank you so much for all of you guys who are over there doing what you do and helping people first. Because you don't have to do this. You do it because you have a genuine heart for helping people. So thank you. Thank you so much. Let's see here. Atina, it's been a minute. I'm glad you're back. Hey, Richard, happy Monday. Thank you so much for your time today. I too was dancing as I make my way to the moon. My question to you today is, could Nvidia 10x again, which would put its evaluation roughly at 33 trillion? In your humble opinion, what would it take for this to happen? In my limited research, I believe for this to happen, Nvidia would have to almost take over the world. In other words, how would they find the revenue to be worth 33 trillion? Here's the thing. You don't necessarily always, guys, have to have revenue commensurate with your market cap. Well, Nvidia is doing that right now. Their last revenue cycle, they did 60 billion, but they got a almost $4 trillion market cap. So your revenue don't always has to be commensurate to what see, you got to understand, guys, is what someone is willing to pay. That's what this thing comes down to. Walmart has $650 billion in revenue, but their market cap is nowhere near the Magnificent Seven's market caps. And they do 4, 5, 6 times more revenue than Nvidia does. You would think all that revenue, 650 billion in revenue, you would think they'd have a market cap higher than 500 and something billion, but they don't, right? It's what the perception of what people believe your company is worth. Walmart sells discount stuff and groceries. Nvidia got stuff that's changing the world. I mean, what Nvidia is doing with these chips, guys, and all this other stuff there, and they're going to change the world. They could be 50 trillion. See, this is how I think. You got to look at this company and what they're doing in the space that they're in. The space that they're in, they are going to change the way the internet works. They're going to change the world. Walmart ain't changing the world. Just saying. So all I'm saying is I'm not going to put limitations on Nvidia. That's not my job. My job is to determine, can I put my money in this company and will it multiply it and get me to where I need to be wealth-wise? That's all I'm trying to do. I ain't trying to figure out their valuation. I ain't that smart. But I am smart enough to understand where the world is going, and where it's going is artificial intelligence, in my opinion. And ain't no company out there at the top of the food chain like Nvidia. Will it last? I don't know, but I'm going along for the ride. All I needed to get to is $5, $6, $7, $8, $9,000 a share, and I'm Gucci. If it get to $500,000, I mean, if it gets to $500 a share, guys, I'm good. If it gets to $300 a share, guys, I've doubled my investment. In what world does that not work? I mean, you think about 11,200 shares at whatever market price you want to put on it at today. Put it at today's market price. If it gets to $500 a share, I 3x my money. You think I'm okay with that? Okay, 3x is my money. It gets to $500 a share, and it's a $10 trillion company. Who cares? Because the valuation is just what someone is willing to pay for it. It's what they believe it's worth or will be worth, right? For me, I don't worry about that kind of stuff, the valuation. I just keep watching the company and where the company is in relationship to its industry and how important is its industry to the overall advancement of our world. See, this world got to advance, guys. And I'm investing in companies that are in front of these advancements or they play a critical role in these advancements. Those are the companies that I'm looking for. That's what Nvidia does. It's one of the companies, it's one of the most important companies in the world right now. Because we're in a process where we're changing. This world is going to change. This internet is going to change the way we know it today. It won't be that way tomorrow. You got to look at what these hyperscalers are doing. Why do you think these hyperscalers are spending 30, 40, 50 billion dollars a year trying to get to the top first? Because they understand what's at stake. That's all I'm saying. I'm not a guy that can worry. I don't get hung up on valuations. I don't. What I get hung up on is what industry is it in? Where are they at and positioned in that industry? And will that industry change the way we do things in this world? That's priceless, guys. That's priceless. That's why you got a company like Walmart with $650 billion in revenue with a half a trillion dollar market cap. They just sell groceries. That ain't nothing gonna change the world. But this little old company right here with these chips it's making, listen guys, you got governments building out artificial intelligence platforms, sovereign governments. Just saying, man, it's a race to technology. See, technology is the future. Nvidia's slap in the middle of it. So for me, whether it gets to 33 trillion, 10 trillion, I don't really care. I'm just trying to maximize the potential growth of my money. And I bought at $105 a share on average. That's where I'm at in this stock. On 11,200 shares, you think I'm gonna be mad if it get to $300 a share and I can triple my money? I'm gonna be all right. All I'm telling you is figure out what you're trying to get accomplished and don't worry about the valuation. What I would be more worried about is what do I see this company in 5 years? Where do I see this company? Based on what I know today, they're growing, they're doubling their revenue. Listen, in fiscal year end 24, their revenue was 60 billion. Fiscal 25 year end, their revenue is probably going to be closer to 110, 120 billion. They doubled their revenue, guys, in 1 year. And they ain't even done yet. Now, again, that doesn't mean it's going to make it. I'm just saying all the ingredients to be a winner, they got them all. I got to go with that. I got to focus on that. They got all the ingredients to be a winner. They got all the ingredients to be Microsoft, Apple, better. Just think when they get to 300 billion in revenue, if they keep the margins. Whew. All I'm saying, again, guys, focus on things that you can control. I can't control their market cap. Nobody can. Nobody can predict anything. Most people didn't think they'd ever get to 140 a share after the split. But they did. I don't know. I just think you buy the CEO before you buy the stock. That's all I'm saying. If you track this guy, this CEO they got, this guy ain't messing around, man. This guy ain't at the NBA Final Four or whatever they call it. This guy ain't at the Super Bowl. No, this guy in the trenches getting this thing. Yeah, I'm telling you. Okay, here we go. GB. Hey, Mr. Travolta, would you care to revisit your target price for end of Q4 for the video? Okay, Travolta is probably a little bit over my talent level. I'm more like J.J. Evans from Good Times. I'm more like J.J. Evans from Good Times. But I get your point, GB. Appreciate you, man. All right, my price target. Again, I'm going to say it again, 165. 165 is my price target for year end. And I'm hoping I'm wrong. I'm hoping the thing is higher. But if I got to hang my hat on something, a prediction, right? An unprofessional prediction, GB, it's going to be 165. That's what I believe. I think after the election, we run. And we may go higher. I don't know. We may hit 175. I'm not going to hang my hat on that one, but I will hang my hat on 165 if these tailwinds that are pushing us from the back continue. The Fed don't throw a monkey wrench in and not reduce rates or something stupid like that. And the mega caps and the hyperscalers come out with good earnings, and then all of a sudden the 900-pound silverback gorilla come out in late November to cap that thing off with a monster third quarter. I think we go to 165. Just my opinion, though. I think we go to 165. All right, so let's see what else we got in here, guys. Is we're at 9:21, and I know I'm a little long-winded as usual, but I'm gonna do everything I can to get to everybody's question. Let's see what we got in here. Mopar, good evening, Richard. Hey, Mopar, man. Good to see you in here, or at least dropping a question. Good evening, Richard. What are your thoughts and experience you've had with short-term rentals like Verbos for second or vacation homes? I'm trying to weigh the cost of strangers using your vacation property that I have kept private versus the benefits of income. If the wear and tear is not worth it, then I'll leave it alone. I know you have a second home and was wondering if you have ever done Verbo short-term rentals on it. Thank you, and I appreciate it. See, I'm a little OCD. I'm a little too OCD for that, for me. So I would never do Airbnb because I wouldn't be able to, my mind won't allow me to rest, because all these crazy people in and out of your house, and all of them have different degrees of how they take care of a house. I'm wired like, I'm just an OCD guy, so I wouldn't be able to do Airbnb or Verbo. That doesn't mean it's not profitable. I got other people that I know that do it, and they make good money doing it. They love it. I'm not wired that way. I'm a one-tenant guy. Give me a tenant, 12-month lease, boom. That's all I'm looking for. So I've never done Airbnb or Verbo, and I'm sure other people have, and they've had good success with it. What I can tell you based on the friends of mine that have done it, yes, the wear and tear is significant. It's significant because, again, you're renting the place to different people. I'm not sure how often you would rent it, but the wear and tear is significant because people are in and out of there. And again, there is no background check. There is no employment verification. Anybody can upload that credit card and pay for it. You don't know who these people are. So yes, from my friends who've done this, they have said the wear and tear is significant. Again, that doesn't mean it be significant on your end, but on their end with their properties, it's significant. But for them, they had properties that were in areas that were highly, highly desirable, so they could charge huge amounts of money for people to use it. Like their properties are on the beach. So if someone's coming into our area where we live and they want to be on the beach, they're going to pay a giant, enormous amount of money to be on that beach. So that's where their properties are, or their properties are on lakes. It's in some area that demand forces a higher rental rate. It's not just some little house over here where, okay, it's 10 others like that. So they are able to offset the wear and tear because they charge huge premiums because of beach access or something like that. Those are the type of properties that they would Airbnb in Verbo. They would not Airbnb in Verbo just a standard regular house in a regular neighborhood, because they just wouldn't, the wear and tear is too great, and you wouldn't be able to charge enough rent or whatever they call it to offset the increase in wear and tear cost, right? So plus obviously, you know, Verbo and Airbnb don't do that for free. They got a nice little hefty little cha-ching they get, whether they ain't got to worry about no wear and tear. They just gonna get their money because it's their platform that you're using. So, and then, you know, you got to also understand most of these platforms, they exist for who? The consumer. So if someone says, hey, I rented this guy's place and, you know, he said blah, 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 but it wasn't there. It was nasty. It wasn't clean. Da, 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 da. It's your word against theirs. And they are a consumer-driven platform. That's how they get paid. So normally when you find these consumer-driven platforms, and it could be eBay, Amazon, any of these places that the consumer drives everything, it's hard as a business owner or a seller on those sites or someone who owns a property, because 9 out of 10 times they want to side with the consumer because that's how they get paid. And they don't want the consumer calling their credit card company charging stuff back on them. So they tend to go with the consumer over the owner. Just my experience, but it could be different. So for me, I don't need those headaches. And for the extra little, now if I had a beach property where I could get $1 gazillion every time somebody stayed there, I'd probably do that deal. But a regular property, I wouldn't do it. I would just put me a tenant in there for 12 months and forget about it. And that way I get to pick the tenant. I get to go by there and check on them every now and then, and I can sleep better at night. That's just my experience. Your experience could be different, but that's my little 2 cents, Mopar. Make it happen. Good evening, Richard and Wealth Builders. I'm doing research and seeing the ups and downs of stocks. Can you explain Form 4 and Form 144, their impact on trading and share pricing, and how much you consider and evaluated it? Now you know good and doggone well, make it happen. Come on now. Y'all know I ain't no expert. I don't even know what no Form 4 and Form 144 is, man. I don't know what that is. I don't know what that is. I don't even know what those forms are. I'm not an expert here. I'm not a stock analyst. I'm not a stock picker. I'm not a CFP. I don't go out and research any of that stuff. I don't care about any of that. So I can't answer that question at all. I mean, I don't. Wealth transfer blueprint 1.0, 2.0. That's all I do. Big boy blue chip. I ain't got to worry about Form 144. It's just big boy blue chip. That's it for me. I don't need to do no research. I don't need to do any of that. Very limited research. Let me take that back. Very limited research. What did the S&P 500 do over the last 10 years? What did the S&P 500 do over the last 15 years? Okay, that's what it did. Great. Here goes some money. What did FTEC do over the last 10 years? What did it do over the last 15 years? Okay, there you go. What did the Magnificent 7 do over the last 10 years? Rate of return. Okay. 6 most valuable companies in the world. Throw out Tesla. Okay, that's good enough for me. That's the extent of my research, guys. That's it. So I apologize, but I don't know what Form 4 is, and I don't know what Form 144 is. I don't even know what that is. So I can't answer that question, but maybe somebody in the chat, the community chat, may know. So you may want to drop that question in the community chat, or maybe somebody want to come into the comments up under here and find this question for Make It Happen and maybe shed some information on that. I don't know what those things are, unfortunately. So Ashley, hey, Richard and Wealth Builders, just checking in real quick before I head into work. I'm a nurse working hard to help people in their times of need, and we appreciate that, Ashley. We know nurses, just like other first responders and folks like that, it's a hard job. So we appreciate you and what you do for other people. Certainly appreciate that. Been doing a lot of overtime plus picking up shifts for bonuses, saving for some projects and investing the rest. Don't believe in bad debt. Good for you. Can save for things I need, AKA new deck on the house because mine is getting weak. Okay, good deal. That increases the value. New deck should, you know, cosmetically beautify the property. So should add a little bit of value. Let's keep on the right track, everyone. I went through a rough patch in August, wrecked my car, hit a deer on the interstate on my way to work. That's right. I remember you mentioning that back then. And hopefully everything's okay with you and nobody was in the, well, I don't know about the deer, but let's see here. Interstate at work, had COVID, stove caught on fire. Oh my goodness, you've had a few things happen there. All in 1 week. My goodness. I didn't give up. Good for you. Good for you. What did I say earlier? Attitude and effort. That's what we control. And that's exactly what you did. You controlled your attitude and you controlled your effort. And it got you through it, right? Bingo. That's what I'm talking about, guys. I keep telling y'all. Control that attitude and that effort. Ashley did it. I keep going because I know better things will come. I have to get to freedom. Everyone in here can do the same. We are all here for each other. The support I got was so great. P.S. Richard, love the dance today. Go Nvidia to the moon. Well, Ashley, thank you for sharing that. That just goes back to your attitude and your effort, guys. She could have easily gotten down on herself and, oh, goodness gracious, all these things are happening to me in a row. Oh, bad luck and all. She could have did all of that, but she didn't. She said, you know something? These things have happened. I'm going to keep pushing forward. Better things are coming. And that's what she's doing. So kudos to you, Ashley, for not allowing your circumstances, you living in those circumstances. You moved through them, kept your attitude good, kept your effort amazing, and you get through it. And now you can continue to get through it. So good for you. Let's see what we got here. Ted McDonald. My favorite move is CSX stock. I've been buying large blocks at $33.50 and sell it after it gets to $34.50 or more. It's a stable. It didn't lose no money on August 5th. Check it out. Research it like CSX because it's the cheapest Class 1 railroad. There you go. Ted just gave you one. You guys want to put that one on the short list and go research it. Ted just gave you one that he's had some success on. So here we go. CIRE. Hello, Richard. I'm a newbie here. This is my first time on Monday Live, so I just wanted to say hey, and that I'm excited to be part of the Wealth Builder family. Hey, we are happy to have you, and y'all know I'm bad with names, so I'm just going to spell it out. CIRE. Good to have you as well. Here we go. We got another question from Sweet Pea. What are the news articles that you read to stay up to date on what's happening in the market? I read CNBC News, financial news every day. I also read Yahoo Finance. I also read Forbes and Fortune and Barron's. I also read Tip Rank. Various ones, guys. Now I'm gonna tell you my secret though. See, here's my secret. So I go to Google, and I'm already signed in, like at Google, right? So I'm signed in. So when I go to Google, I've already customized it. So when I go to Google, the first thing it gives me is all financial news. So you can go into Google and customize it. So when you go to the Google homepage or whatever they call it on your phone, you can customize it where it'll give you information like little stories right off the top. And then if you don't like those stories, obviously you can go to the search bar and search for whatever you want. So I've done that on my phone. So anytime I bring up Google, especially during the day, it's going to give me the top financial stories, and it makes it easy for me. So so that's what I do. There is no one publication I use or no favorite publication. I take that back. I would say probably my favorite publication, and not because I'm getting information to make decisions, but it gives me information that's generally what's going on in the stock market on a day-to-day basis, like CNBC Financial. I can go into CNBC Financial and it'll give me up to the minute what's going on. It'll have various stories in that feed that I can click on and find out what's going on with the three major indexes, what's going on with stocks, what's going on with tech. It'll have all that stuff right there for me. So that's a good one for me. And then Yahoo Finance is probably my second biggest one. I love Yahoo Finance. I think they got good information in there. And again, it's just information. It's not that I believe all of it. It's just more information I can have to share with you guys to get you to thinking is really what I'm trying to do. I rarely look for information like that to make decisions on stuff. When I'm making decisions on a stock, I go to the company's website and I look at what this company does, and then I think about this industry that this company is in, and I say to myself, is this industry set up to change something in our world? Like when I looked at Rocket Lab, I said to myself, you know something, this company is a disruptor. They're bringing in a new way of aerospace, building rockets, reusable rockets. So for me, I don't really look at, oh golly, it's not making money. I just look at, is it in an industry where it can be a disruptor and change something? And then growth comes later, right? So that's sort of what I do with Yahoo Finance and CNBC. It's not, I don't read those to make decisions. I read them so that I got information and I know what information is out there. What is the Fed saying? What did the Fed president over here out of New York say? So I read articles like that. So when I'm ready to make my video, I can say, well, hey guys, here's what the Fed is talking about. That don't mean I believe all of it. It's just, here's the information. Now you take that information and figure out how you can utilize it to multiply your money, right? So for me, Sweet Pea, those are the two big ones, Yahoo Finance and CNBC Finance. Those are the two that I look at mostly. And then I look at others as I go through Google. Let's say I'm looking for, and another thing that I do every day is I go into Google and I do Nvidia news, and then I put the day's date in. So like today I went in Nvidia news 10/21/2024, and I hit the search button on Google and it gives me all the current update information about Nvidia. Just an easy way for me to search current information, up to the second information on Nvidia. Just a little thing that I use on a day-to-day basis. Yvonne. Hey, Richard and Wealth Builders. I'm wealth building with paper assets such as Nvidia, Mag 7, and ETFs. Eventually, I'll get into real estate. Thanks for sharing your wealth building plan. Yvonne, you are absolutely welcome. And I love what you're doing. Nvidia, Mag 7, ETFs, and eventually getting into real estate. Perfect. Love it. Keep doing what you're doing. Regina Vaughn, good evening, Wealth Builders. Good evening, Regina. Michael, do you have a game plan on when you'll decide to take Social Security? Do you think you'll take it at 62 and invest it or wait? Oh, Michael, I'm taking mine at 62, man. I don't know if I'm going to be here at no 63. I ain't trying to wait for nothing. Whatever they owe me, I'm getting it the first day I can get it. I ain't waiting until 67 and all these. That ain't guaranteed to me. I want my money right now. I did the same thing with my little NFL pension. I could have waited and got more. Give me my money right now. So that's what I'm going to do with Social Security. As soon as I turn 62 and I qualify for it, boom, give me my money right now. That's it. And then I'll do whatever I want to do with it. Invest it, put it in CDs, whatever I want to do with it. But yeah, I'm going to take mine at 62. There's no reason for me to wait till 67. I might not be here at 67. So I'm going to get mine while I'm here. Right now, 62. So let's keep moving. Maurice Banks. Good evening, Richard Fain. Oh, good evening, Mr. Fain. My question is now a good time to think about the 2025 Roth contribution? And do you think investing in NVTS in my Roth IRA is a good idea? I know that's two questions. Yeah, I think it's definitely time to start thinking about 2025 contributions for the Roth. Absolutely. Start getting the game plan together and thinking, okay, what am I going to put this money in? Personally, and again, it goes back to what you're trying to get accomplished, right? It goes back to what you believe NVTS can be. Personally, I look at it as a short. So I wouldn't buy it and put it in my Roth IRA because I don't look at it right now as a company that's going to be gigantic anytime soon. That's just my opinion. That it could be gigantic tomorrow, right? But for me, I probably would not put it into my Roth IRA. I'd probably, well, it depends on how old you are right now. So a guy like me, I'm 56. So in 3.5 years, I'll have access to all of my retirement money without any penalty, right? So if I'm thinking to myself, okay, in the next 3.5 years, do I believe in NVTS as a big company? Right now it's trading at $2.50 a share. Do I believe it'll be $25.50 a share in 3 years? And if I believe that, I think you nail it right on the money. Put it in the Roth and let it grow. I don't know enough about the company to make that decision. What I do know about the company is its 52-week high is like $8 and something. I bought it at like $2.50. That's all I know. And I know it's in the artificial intelligence arena. And it's doing some cutting edge stuff, but it ain't profitable yet, at least from my knowledge. It's not profitable yet, but it's a good little company that's growing, right? It's taking on more investment, trying to grow. $2.50 a share for me. If I lose it all, I ain't gonna, it won't collapse anything in my world. So for me, at $2.50, and I think its 52-week low was like $2.14. If it goes to $5 a share, if it gets a quick little jump, and it goes from $2.50 to $5 a share, I'm out. I just doubled my money. I'm out. So for me, I don't look at it as a long. You may look different at it, and if you do look at it as a long, and you believe it can go from 2.5 to whatever, and you believe that's what you want to do with the Roth, then go get it. I don't know enough about it. I'm not in it that long. I'm in it till $5 a share, and then I'm pull the parachute cord. I'm in at $2.50 on it, $2.50 a share, $2.50 a share. When it get to $5 a share, I'm pulling the parachute cord on my money, and I'm out of there. I might even pull the parachute cord at $4 a share, depending upon how I'm feeling that day. But really, I'd like to stay in it to $5 a share, and I'm pulling the parachute cord and double my money, and I'm gonna get out. But if you believe long term, it's going to be a good company, and it's going to go up in price. It might not be bad to put in the Roth, but I like the idea of thinking about the Roth and thinking about, okay, what am I trying to accomplish with the Roth? How old am I, and how much longer do I have to invest? All those things think about, and then figure out what is the best investment that gives you the maximum potential to increase the value of that Roth by the investments you put in it. Let's see here. D Fortune. Hey, Richard, I'm excited about your recent investments. Okay, what am I talking about? D Fortune. Hey, Richard, I'm excited about my recent investments I made, but I wanted to know, are there specific index funds that complement individual stock holdings, such as sector-focused or international funds? There are tons of index funds, tons of ETFs. Again, guys, you got to get back to what you're trying to get accomplished, and what do you want to accomplish it with? Y'all know my cup of tea. My cup of tea, I don't care if there's 1,000 index funds out there. I care nothing about that. My cup of tea is the S&P 500. So I'm going to go find me an index fund or an ETF that tracks the S&P 500. That's it for me. And then I'm gonna go find me an industry or a sector specific ETF. For me, it's the tech sector. So I go find me an information technology ETF that tracks the information technology sector. That's it for me for ETFs. One more. And then I go find me a total stock market ETF. And for me, that's Vanguard VTSAX. So those are my 3 ETFs, and index fund. SPLG, FTEC are my 2 ETFs, and VTSAX is my index fund that I only invest in that through my simple IRA through my company. I have a simple IRA set up through my company, and that's the only investment I buy every single month, and I've been doing that every month for the last 4.5 years. I don't buy nothing else but that. And it's crazy right now. See, for me, guys, I don't need all these ETFs and all this. I don't need all that. That's just that's too much for me to try to keep up with. I just go get the basic things that I know gonna hit home runs. And that's S&P 500. Why? Because it's gonna give me at least a 10% rate of return over the next 10 years. At least that. Why? How do I know that? I don't know it, but history says it will, because it's already done it. For 90 years, it's done it. So for 90 years, it's done 7 to 10%. That's a steady Eddie. I need a steady Eddie in my portfolio. Now, once I get the steady Eddie, the rest of the investments have to outperform the steady Eddie. Why would I buy something that don't outperform the S&P 500? I wouldn't, unless it's a short. Now, these little shorts, they ain't gonna outperform the S&P, but I ain't in them to outperform the S&P. I'm in them to go up $3 or $4 so I can sell it and make some money. So it's a whole different ballgame. But my longs, I don't buy no long investments if they don't outperform the S&P 500. Period. I don't want nothing in my portfolio long-term that can't outperform the broader stock market. That's it. So for me, it's not about all these different ETFs. I don't care about all these different ETFs. All I care about is which one do I like and can it give me at least a 10% rate of return? And that's what I do. So it's a bunch of them out there, D Fortune, but you got to figure out. I just try to simplify it for you guys and say, think about S&P 500 and then think about a sector that you like, whether it's healthcare, tech, energy, consumer discretionary, real estate. Find an industry that you like, that you believe gives you an opportunity to what? Multiply your money above what the S&P is doing. That's the key. I gotta pick a sector that outperforms the S&P. So for me, it's technology, information technology. FTEC outperforms the S&P. In most years, it does. Now they're about neck and neck this year, but in most years, FTEC has outperformed the S&P. And then obviously the Mag 7 outperforms the S&P over a 10-year period. Now, will there be a year the S&P might outperform these two? 1 year, 2 years maybe, but not over 10 years, at least in my research. And over a 10-year period, Mag 7 outperforms the S&P. FTEC outperforms the S&P. But why do I keep the S&P? Because it's my steady Eddie. It's my hedge against concentration in the Mag 7 and tech. See, everything else I got is tech. My hedge against tech is the S&P 500 because you got all 11 industries in there, not just tech. Even though tech is probably the most heavy weighted in there, you got 10 other industries that can balance it out, right? That's why you see the Dow jump up 500 points and the S&P might lose 100 points. Guess what? The S&P, if the Dow goes up 500 points, but the NASDAQ goes down 100 points, you typically see the S&P kind of stay steady because of the non-tech companies that are in there, right? So I like my mix. My recommendation, D Fortune, is get out there and find you a good broad-based stock market ETF. I like the S&P. I like total stock market. Those are my two. And then I like the tech industry. So that's my sector-specific ETF. And then I get some individual stocks. But I only go big boy blue chip, right? None of this other funny stuff, just big boy blue chip. So I go 50, 30, 20. 50% broad-based stock market, at least a 10% rate of return. This year, I'm closer to 20 on my SPLG. And then I go 30% information technology, tech sector, not one company, but 374 companies, which are in FTEC. All information technology companies. So that's 30% of my money. And then 20% goes to individual stocks, AKA Magnificent Seven, all hyperscalers, mega caps. That's it. And then my little shorts. That's the portfolio, guys. Ain't nothing fancy about it. Right? But all of them heavy hitters. They heavy hitters, man. Everything I just gave you guys are heavy hitters. So go check them out. D-Fortune, go check them out. Go look at that Wealth Transfer Blueprint 1.0. It'll show you all the heavy hitters. I'll give you the 3 heavy hitters. Go look at the year-to-date on them, man. Go look at the 10-year on them. They're heavy hitters. That doesn't mean there ain't other heavy hitters out there. There are. I'm just telling you the 3 that I like. Valeria Joseph. Good night, Mr. Fain. I have brought most of the stocks you recommended. I'm working on increasing the fractional stocks. Good for you, Valeria. Stick to the plan. Just stick to the plan. Right? I'm not your financial advisor, but it's okay to copy my plan as long as you take responsibility for your execution. My plan has done well. It has. My plan has done well, guys. I ain't trying to brag, but my plan has done very well. And I'm sure y'all's plan is doing well too. We should be. If we're in big boy blue chip long term, all of us should be winning. That's the way I look at it. All right, I think that's it, guys. I think I'm done with the comments. It's almost 10 o'clock, so I got to wrap up anyways. But let me see if we got any 1 or 2 left before we wrap this thing up. Wealth Builders, y'all have been fantastic tonight, man. Thank y'all so much. I appreciate y'all, man. Let's keep winning. Let's keep executing and let's keep winning. Even if we have a little bit of a little setback, remember, it's a continuous bull market. And it's healthy for this continuous bull market to have temporary consolidations and what? Corrections. It's healthy for it. So don't, oh, Lord, oh, goodness gracious, it went from 144 to 135. Oh, goodness gracious, it's tanking. No, that's healthy for the stock market, guys. It's supposed to do that. Now, I don't want it to do it, but it's going to do it. Not that I know that, but I also understand it always bounces back. It always goes higher, right? Right? Remember the video was $90 a share. What, 2 months ago, 3 months ago? August 5th, it got down to $90 a share. August 5th. What is it now? September, October? So 2.5 months ago, it got down to $90 a share. What did it close at today? 143. After hours, 144 and some change. See what I'm telling you? It don't last, guys. I'm telling you. It will bounce back, in my opinion. That's what history tells me, right? So just keep that in mind. Even if we do see a little setback, enjoy the win. And know, see, this is where I hang my hat on, and then I'm going to get out of here. I hang my hat on this. This is what I hang my hat on. If it got to 144, see, I believe it always can get back to 144 and go higher, especially if there's nothing wrong with the company. There's no business performance. If it got to one, that's why I kept telling y'all, it done got to 140 before, guys. At some point, it's going to get back there. I don't know when, but at some point it will because it's already did it. So whatever we get to over these next several weeks, next several months, and if it reverts back a little bit, I don't worry about it because I know it can go back there again because it's done it already. There's nothing wrong with the company. It's one thing if the company comes out with earnings and they miss everything. That's a problem, right? That's a problem. But if they're hitting everything and doing everything they can, increasing revenue, profitability, the stock price will catch up at some point. Ted McDonald, anybody got paid research stock platforms they use? Somebody can chime in for that. I don't pay for none of that stuff and never will. But that doesn't mean you can't. If you feel like it adds the value you need, just be careful, guys. Be careful paying for stuff online for research and all this stuff. Please be careful. Again, our goal should not to try to be an expert because we can't be an expert on our smartphone. You're going to need a little bit more tools than this. You're going to be a little bit more training than that. What we should be trying to do is not be the expert. We should be putting our money in investments that don't require us to be the expert. That's how you win. That's how retail investors win. You put your money in things that don't require you to be the expert. Yeah, I want to have a little general knowledge. I do want to know what ETF stands for. I do want to know what an S&P 500 is. That's general knowledge. But all this deep dive and charts and graphs and all this stuff, In my experience, it's a waste of time because you're going to need more than a few days to learn all that stuff. You're going to need years of experience, guys. Years. And even people with years, I'm talking about years and years and decades worth of experience, guess what? They get it wrong. Just saying. But nothing wrong with that. If you want to go pay for it, it's your money, go right ahead. Mopar, thank you. My second house is front row beachfront property. There you go then. But I'm OCD as so. You OCD too, huh, Mopar? You like me then. See, for me, I wouldn't be able to sleep at night knowing 4, 5, 6, 7, 8, 10 people up in my house doing anything they want to, tracking all kind of sand in there and peeing all over. I apologize. I shouldn't have said that. But using the bathroom all over. I couldn't do it. So Mopar, you do what you got to do, man, but I get it. Beachfront property, you're gold. I think you're golden if you want to do that because that carries a premium. But again, you got to be comfortable with it, and you got to be comfortable with the wear and tear. One other option could be do more of a longer term stay instead of doing like a weekly thing where people in and out every week. Maybe you do like a 2-month stay or a 4-month stay or something like that, a longer term rental to kind of weed out a lot of that way you can demand a bigger deposit. And personally, I wouldn't do Verbo or Airbnb. I'd probably find someone in your area who specializes in beachfront properties, like a management company who specializes in that, and that they can really pick the right renter to go in there who got the right, that's what I would probably do instead of the Airbnb thing. Them folks, I don't think I'd put my house or my property on Airbnb or Verbo. What I'd probably end up doing is if I got a beachfront property, I would probably find me a higher end place. Now they may charge me a little extra, but they're going to take care of the place and they're going to make sure they vet these people that go in. Whereas, if I got a credit card and I just go online to Airbnb, I'm good. I just get in there. They don't know who I am. So that'd be my thing. So good luck on that one, Mopar. Good luck on that one. I'm sure it's a beautiful beachfront property though. Tracy, Dynamite. Yep, J.J. Evans. Some of y'all know who J.J. Evans is from Good Times. I know a lot of y'all like, what the world is Good Times? Go out and Google it. It's one of the greatest shows in the history of television. I grew up on Good Times, and man, goodness gracious. They don't make them like that no more. Tracy know what I'm talking about. GB probably know what I'm talking about. Some of y'all know what I'm talking about who are in my age bracket. Renice Taylor. Hey, Richard, thanks for taking time to answer all our questions. Do you or have you purchased stocks by doing option plays? No, I don't do any options at all, Renice. It's just, again, in order to, and this is just my opinion, in order to be effective and really make real money, you got to know what you're doing. This can't be a part-time, something, I'm going to go to my day job and then I'm going to take an hour a night and read up on options and I'm going to become this great options trader. Don't work that way. Don't work that way. Go look at the statistics. Statistics say 99% of the people that try options trading, they lose money. Why? Because you can't just wake up and know how to be a great options trader. It takes years. It takes experience. So I much prefer to concentrate on investments that do not require me to be the expert or have some unusual amount of experience. Options trading, in my opinion, you do if you really want to make real money. Now, if you want to go out and piggyback on some guy or gal on YouTube or one of these TikTok or one of these other places that are going to do all the work for you, go right ahead. In my experience, that don't work out either. So my recommendation is if you're interested in options trading, go out on your brokerage app or something like that and talk with, and see what type of information they got in there. If you got a broker, maybe your broker can help you out, like a financial advisor, maybe they can help you out. I personally just try to encourage people to find investments the traditional way. And in this community, we don't talk about options trading because that's not traditional investing. And in this community, we're going to be traditional investors. Now, I can't control what someone does when they're outside of the community. If they want to trade options and do all of that when they're outside of the community, fine. I just don't want people talking about that in the community, because I understand from my 30 years of experience, when we typically try to do things that require us to have a certain level of expertise when it comes to investing, you really got to know what you're doing. You just can't wake up one morning and make $1 million options trading. It just doesn't happen, right? It doesn't. So my recommendation is, if you do want to learn about that, you're going to have to take that off platform. And there are plenty of folks out there that'll be more than willing to try to teach you. But I would ask you to think about really what you're trying to get accomplished. And if you're trying to take money and put it in something to build wealth, you may want to think about just the traditional route, right? Go get you a great ETF that tracks the S&P 500 and just dollar cost average over the next 10 years, and you'll be fine. Get you go get you a sector ETF in a really good sector that's growing. Dollar cost average in every month. Do that for the next 10 years, you'll be fine. Mag 7 or any of these other great companies out there that you like and you use, invest in them, become a shareholder, consistently invest in them, do it for 10 years and you'll be fine. That's the methodology that I try and get across to people in my videos and here in this financial community. That's why you never hear me talk about options trading in my videos. You never hear me talk about Forex trading. You never hear me talk about any of those non-traditional ways of investing, because in my experience, the average person is not going to get it. It takes a higher skill set to have those things happen for us. So not saying that you don't have that higher skill set. I'm just saying that's just not what we do in this community. Hopefully traditional investing will be something that you'll consider though. All right, that's it guys. I'm out of here. Y'all have been wonderful. 10 o'clock, I am past my bedtime. So I'm gonna sign on out of here. Thank you so much, Wealth Builders, for checking in. If I missed your question, certainly do me a big favor. Send me a direct message on Patreon with your question, and I'll make sure I get it answered tomorrow for you. Just a one-on-one between you and I. Again, you guys have been wonderful, fantastic. Look like we got about 300 and almost 350 people in here. So pretty decent, pretty decent. Thank you so much. Thank you so much. I appreciate you guys for hitting the thumbs up button too. That's cool, even though it's just our private thing here. Hey man, keep doing what you're doing. I think these next couple months are gonna be crazy. So get in where you fit in, man. Make sure you got your plan together. Make sure you got some money. Make sure you DCAing into your favorite investments. Make sure that you, don't overstay your welcome in an investment that you don't need to overstay your welcome. Know what your game plan is on that investment. Don't overstay your welcome, right? Y'all know what I mean by that. If you got to parachute out the thing, parachute out it. You make your money, parachute out of it. If you're long in this thing and you're 3, 5, 10 years in this thing, keep dollar cost averaging. And unless something changes business performance with the company or something changes with the industry, then at that point you may pivot. But for me, I just think tech is the future. So I'm going to stay tech and I'm going to stay S&P 500. And that's going to be it for me. And then I'm going to keep looking for me some little shorts. So whatever I run across, you guys know I'll share it with you. So be encouraged. I think this is just the beginning of a good run for the last quarter of this year as we get into earnings season, past the election, and then, Fed continue reducing rates. I think it's all catalyst to take us higher. We'll see though. I appreciate y'all guys. Thank y'all for stopping by the live, the Q&A, all your great questions. I will see you guys next week. Same time, 8 p.m. Eastern time. And I'll also see you guys on a day-to-day basis in the community chat on the main Patreon page where I do my posts. And if you need me, just send me a direct message on Patreon. I'm easy to reach, and we can have a conversation about whatever you want to have a conversation relating to your wealth building. I'm here to help you and assist you, and all the other wealth builders are here to assist you as well. So thank you guys. Have a good rest of your night. Y'all have a good rest of your week. Let's go get this money. Let's go get this wealth. All right? Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, stay long, stay strong, and I'll catch you guys on the next one.